All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in this awesome Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes. Let's make sure that we participate and engage. It's always nice when we do that. So let's get it started. If you're all ready to go, drop me a 1 in the chat and we can get this session started. Hope everybody is having a happy Tuesday. All right, I see the ones coming in. All right, I appreciate it. Appreciate it. Let me make sure everybody has control over their microphone. And you do. All right, so let's jump out of here and let's get down to business. So we go over to trading economics and we see that retail sales rise less than expected, right? So that still puts some downside pressure on the US dollar. We know the inflation data is starting to come down in the United States, right? Last week we got the CPI and the PPI, and now we've got retail sales down just a bit. But I'm telling you, right? You guys, it's earnings season, right? So we saw some numbers start to come out for the banks today on Wall Street, and all of a sudden, right, you get in that rhetoric across markets that, hey, we may not see a recession at all, right? The way these bank numbers are coming in, and just the way the CPI is coming down. So they're saying you're hearing more and more talk now. All of a sudden, the ebbs and flows about the soft landing, maybe not a recession at all with the latest CPI data. And that CPI is starting to come down globally to the point where you even had like one of the ECB reps came through a little bit dovish, right? Now, we haven't heard from Christine Lagarde, the head of the European Central Bank, for a little while now. But you had one of the representatives say, hey, definitely a rate hike coming for the Eurozone in July. But after that, there's no guarantee for rate hike because of that inflation data is starting to come down. So everybody's remaining data dependent. Now, that's quite a change in tone, right? For the ECB. And again, right, we're going to get both sides of that argument from the ECB. That was just one of the representatives talking. But again, we're starting to see that inflation starting to cool, which is a good thing. So today, when you look at some of the, on the banking side here in the United States, it's earnings season, earnings reports coming out. And we saw that, hold on 1 second, I'm sorry. Make sure we have some people that joined us. All right. Okay, so for example, with a company like Bank of America Bank, Bank of America's revenue is up 19%. Okay, so this is all huge because these are key data points to focus on when we try to get a beat on where the market is going overall, right? And the overall condition of the economy, right? Bank of America's deposits are up 40%, and their net interest income is up 14% on a forecast at 8%. All right. So Bank of America is doing quite well. As a matter of fact, the investment banks overall, their investment bank income, the investment bank income for investment banks, everybody, is up 76% on higher interest rates. 76%. All right. JP Morgan, we know is the behemoth. Net interest income is up 44% at 21.9 billion. So Jamie Dimon and the JP Morgan crew is rocking and rolling. I'll say that again. Net interest income, right? Lending, money made. I'm just talking, Benny. Money made from. And I'll find some articles. As a matter of fact, here, let's do this. Let's do this. I'll do this for you. Okay. That's a good. Bank of America. Bank. Earn. Let's do it like this. Okay. That's just me reading from what I read today. So let's go to news, and I'll give you the Reuters article right here. Okay, so you guys can read about this. Here, I'll put this right here in the chat for you. Here's one. There you go. You can read about Bank of America's earnings. And then all we have to do is and we can say JP Morgan. Right. So what I was talking about earlier is just some things that I read from articles. Okay. Always tracking the news. One of the first things I do when I wake up in the morning and throughout certain times during the day. Here we could do JP Morgan. We do the New York Times report, and here you go. I give it right to you. So V, boom, and then we got more. We got Morgan Stanley came through. Their net interest income is up 23%. Okay, so you talk about who's benefiting from Fed hikes, the banks are. Okay, so the wealth management is up 16%. Okay, at Morgan Stanley. All right, so these are some of your large banks. So right here. Okay, so you're trying to get an edge. These are key data points that we want to be in tune with. All right, there we go. Beneath, how's that? Good?
Amazing.
All right, awesome, awesome. Here we go. So we're all set. So yeah, the bank. Well, matter of fact, we'll pull up some chart. We'll pull up some charts on these banks. But yeah, they're making out big, right, from these interest rate hikes. So we always talk about, right? Hey, it's capitalism at its finest. We either complain about the game or figure out how we could be a part of it, right? And this is one of the ways that we could be a part is through investing and trading. As a matter of fact, a lot of like Bank of America, like their trading sector, you know, and departments, right, are doing very, 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 very well when it comes to the trading space. So banks are up, and now we've got tomorrow. So the main ones I focused on, like PNC Bank, when you're like a smaller regional bank. So just to show you, well, just to tell you about the divide, right? When you talk about these big behemoths, these banks that are too big to fail, and then like your smaller regional bank, like a PNC Bank. So we said, hey, Bank of America, I believe it was the net interest income was up 14%. JP Morgan was up 44% at 21.9 billion. Then Morgan Stanley is up 23% net interest income. Then you have your smaller regional bank like a PNC Bank. The net income, I think it was like 3%, 3 or 4% or something like that. So there's this huge divide between these bigger banks, you know, and then your smaller regional banks, and they really all need to be viable for the economy to stay rocking and rolling. Now, talking about is it on trading economics? It might have been. I was reading a ton today, guys, so I know I'm kind of going at you with a lot of stuff. But so that's the banks. But back to the part of the potential of a soft landing, right, or no recession at all, is because they're looking at these earnings reports. Economy's rocking and rolling. CPI came down, PPI came down. It's starting to happen globally in a lot of spots, not all, but where inflation is rising at a much slower rate. But the one thing here in the United States that's sticky is the wage data. Okay, the wage data we have to continue to watch out for, because we're saying here soft landing or maybe no recession at all because of these numbers are coming down. But the bottom line is the United States is still producing over 100,000 jobs per month, right? And in essence, that's a good thing. But usually with job growth usually comes wage growth, right? And that could lead to higher inflation. So there's still some things that we have to get under control in regards to the wages, because right now, if we're trying to get back to 2% inflation, and we want that to be sustainable, right, which is still a little ways away from that, then right now, when you look at job creation and wage growth, it's kind of it's not falling in line with the 2% target. So there still may be some pain there to come. Not sure how that's going to work out, but just wanted to give everybody a heads up on that. So lots and lots of news out there, which I think is pretty cool. I mean, it might not be for everybody, but I think it's important because I'd like to know, right, when I'm on these charts and I'm putting my money on the line. So any questions on any of the fundamentals that I talked about so far?
What up, though, Ben?
Hey, what's up?
No, so with a soft landing, how would it affect the export rates? Will the safe havens, like Japan, want to continue to keep the low rates, or will they continue to threaten to intervene, or will this kind of back them up?
Yeah, it's a great question. I mean, exports are good. Japan is an export economy, right? It's an export economy, so the ebbs and flows. So that's something they like to monitor the speed and rate in which that yen is declining. That's when they typically like to step in. So there's always a possibility of that, right? The stock market is rallying. The Nikkei, you see Japanese shares track Wall Street higher. The Nikkei 225 climbed up 6.6% above 32.6. So overall, if the markets are rocking and rolling, and exports that, more and more exports, people, I saw a report that people are still out here spending just at a slower rate, right? So they haven't hit the cutoff point at least yet. I still don't think we're totally out of the woods. We'll see, because I know a lot of reports are showing that it's, people starting to go into credit, things like that. But I think we're living in unprecedented times. We never got hit with the series of things that we got hit with all at once over the last few years. War, right? Supply chain disruptions, pandemic, once in a 100-year pandemic, things like that. So I think there's going to be a lot of new history written, as we move forward and how we navigate through these things. But I tell you what, jobs market, the consumer is still fairly resilient, So in regards to exports for Japan, I see that as a good thing. In regards to their currency, that just depends on the rate in which people start to pile in on that yen. Right now, though, when you see markets rallying, that's no play for the safe haven like the yen to gain strength. You see the markets are going up, and we'll take a look at some of the indexes and things like that tonight. Great question. Great question. We see here that in New Zealand, inflation slowed to 6%. So we can see here that it came in 1.1%, came in a little bit over forecast, but probably overall, looking at their core, it is rising at a slower rate. We know New Zealand, the Reserve Bank of New Zealand is concerned, as we are here in the United States too, with that second bout of inflation. So things can be going good, and all of a sudden you get tagged with a second bout of inflation. So, definitely, I think the central banks that are expected to hike rates this month are going to do it, but then after that, it's up in there. It's going to be data dependent. All right. We can see here in Canada, right, where the CPI that was at 8:30 this morning, where we see that it came in. See how it came in, trim CPI up a little bit, right? Came in up a little bit on the CAD, and this is what we're talking about. So we're still not quite out of the woods yet, right? It's a little bit of back and forth. We know they pause rates for 2 sessions, and then they hike rates again, concerned about, inflation creeping back up. And then we got the number that we did today. So fascinating steps. So one last time. Any questions on any of the fundamentals?
Yeah, Benny.
Yes. What's going on?
Yeah, I'm okay. How are you?
I'm doing pretty good. How are you, sir?
Yeah, I'm doing well. Just a quick one on the net income of the 3 bigger banks in the States.
The net interest income?
Yeah. And what I want to know is the impact of that on the economy with regards to forecasting into the next quarter.
Well, what it's saying is that your consumer is still moving. There's not the slowdown like people thought, with the rate hikes. Like, like I said, the consumer is spending at a little bit of a slower rate, but in regards to lending, these banks are still making loans, and people are still taking loans and borrowing money at the rates that these loans are at, right? So that's what has the morale up in regards to, hey, we're probably gonna see a soft landing or no recession at all. That's what has me. So that's a positive sign. The banks, because that's where they're making the money. So the Fed is hiking rates, which that sets the baseline, right, for interest rates when it comes to mortgages, auto loans, things like that. But even though those rates are going up, the banks are still making deals with consumers, and with companies, not just the consumers, but with large conglomerates borrowing money. So that's a positive sign, Jeremy. That's a great question. One of the things that I was reading on was in regards to a lot of people. So on one side, you have it where, yes, wages are sticky, jobs are still being created. That could lead to higher inflation. But another option too that's out there, right, is that these companies are still posting huge profit margins too. So what could also help is just a markdown, right? From like these companies are still posting pretty sizable profit margins. So maybe a markdown will come, to kind of cut into that profit margin that can kind of stem the tide as well. So not only do you have wages and job growth and things like that, it's just maybe the profit margins for these companies come down and they mark things down a bit, right, and take less profit that can bring some prices down. So still a lot out there, a lot of different scenarios, but the markets, as you could tell by like the S&P, the NAS, stuff like that, your indexes, it was pretty positive. The sentiment is pretty positive right now in the market. So we'll see how it continues to play out. Any other questions? No. No questions. All right. I don't know, guys. I think it's we talk a lot about the technicals, but the more and more you learn about the fundamentals, I hope, right, that is helping some of you all kind of gain an edge in the market and kind of can put your mind at ease when you're in some of those longer term swing trades in regards to as to whether or not should I stay in this trade, has my directional bias changed at all? And the more knowledge you have fundamentally, the better off you are in regards to your trade psychology. At least that's my opinion. I can only speak for what's helped me in the past. So I hope that it helps some of you. Okay, so let me go over to the charts and take a look at the DXY because we're coming into a little support. We know that the dollar sold off. Said it helped you this morning, JC. Awesome. Yeah, appreciate it. Appreciate the feedback. So here is the DXY here on the gold trade. Oh yeah. Definitely with that gold, because gold is predominantly fundamental driven, right? So it's fundamentally driven. So let me. A lot of people don't know that in the beginning. So if you want to trade gold, you definitely want to learn something about the fundamentals. So here we are on the DXY, right? We've got that crown drawn up, and we saw that the dollar, it ranged for a bit. It wouldn't break that daily support there in red, but finally we broke it and we moved down to that weekly support zone, right? We're getting there, and we can see we're getting a little bounce, right? We can see if we look left before we saw the dollar get a rise right off of that weekly level. So we'll see. We shall see, right? We still expect 25 basis points out of the FOMC. So even though CPI is coming down and the dollar sold off a bit, it's still the almighty dollar. So we'll see if we get a correction and then probably, a further move down. But we have to be patient and wait and see. Any questions on the dollar right now? I don't think we have anything to hear from the Fed this week. Nobody from Fed is talking Wednesday. We got housing starts CPI coming out for the pound at 2 a.m. That's going to be huge, guys. Employment data at 9:30 on Wednesday for the Aussie. Unemployment claims for the U.S., but I don't see any Fed members speaking, really. Okay. All right. If rates are up, why is the dollar a bear? They're selling the dollar off because they're thinking they're looking forward, right? So the Fed, along with other central banks, have hiked aggressively. So what they're doing now, big money is looking ahead, right? So when they see CPI data come through, PPI data come through, showing that inflation is slowing like it did last week, the dollar is selling off, and you saw the stock market rally because it's like, hey, we're going to take this cash and we're going to put it in the riskier assets because we're looking way ahead, and we're projecting that the Fed is going to maybe one more rate hike, but then they're going to pause rates and then cut rates, right? So when you're talking about borrowing costs and lending costs, you know, when you talk about companies and expansion and being able to borrow the money at a cheap rate to invest and get a return on their investment, right? Creating job creation, stuff like that going forward, way down the line, right? That you saw the dollar sell off. Okay, that's why, right? Because you were thinking the Fed has gone from, hey, you see the change, well, you hear the change in the rhetoric from, hey, we're looking at 3-4 more hikes at 25 basis points at least, or some central banks, hey, we're looking at 50 basis points for the next 2 meetings. Now all of a sudden it's maybe one more hike at 25. Then everything from there is going to be data dependent. You hear the change in the tone and the rhetoric, right? So the markets tee off on that, right? They're listening for any changes in the rhetoric to represent any type of softening in the Fed stance in regards to rate hikes. Okay, so that boosts the sentiment. So you see the stock market, you know, running right to the upside. But that's been the battle for over a year now. The Fed saying, hey, inflation, we're nowhere near the target or where we need to be. You have to remember the Fed now and central banks, that target for interest rate, right? Because their number one goal is price stability. So they need that target to be 2.5%, 3 at the max, but preferably 2% if they can get to that target, right? So when inflation is high, right, they want to start running those interest rates up to do what? Slow spending, slow to make it expensive to borrow and spend. That's one of the tools in their belt, okay? Or, you know, they start unloading their balance book, right? Which means cashing in on certain investments that they hold and pulling money out of the market, out of circulation. See? So that's the tools, the ebbs and the flows. They're looking for price stability, right? You don't want inflation to be out of control. Like, for example, years ago in Zimbabwe, when inflation was like ridiculous, they had hyperinflation and their money was worth virtually nothing. Right? So you have to control it. You have to get the inflation genie back in the bottle. All right. So when they start to see those reports to come through, those data points that we track so closely, right? CPI, like that's what I said tomorrow. Oh, that's important for the pound. That CPI report year over year and their core CPI. Why? Because they've been aggressive, saying, hey, inflation is high in the UK. We're looking at hiking rates. This meeting coming up, the next meeting, you know, they're going back and forth now, the Bank of England, and you're reading reports. Is it going to be 25 basis points or 50 basis points at their next meeting? So a CPI report to come out tomorrow, help investors, it'll help them a long way in trying to determine whether or not it's going to be 25 or 50 basis points at the next meeting. So if they see the forecast is 8.2%, okay, the CPI. So if it comes in way under forecast, right, because that's still above target. So if it comes in under forecast, maybe they're looking at 25 basis points, right? So it's always about what's ahead. And that's how Ryan and I want all of us in this group to think. What's ahead, okay? What's ahead? So especially if you're swing trading. So that's that. Great question. All right. So yeah. So that's the DXY there. Oops. Uh-oh. Get back into my charts. I want to look at, okay. Let's take a look at our, we have posted the euro dollar. So I want to take a look at that, or take a look at the pound dollar first. And then we'll take a look at some of these indexes, and some of these bank stocks. All right. Let's see. All right, so let's go and take a look at this euro dollar scenario that we have drawn up. And we know we blazed through some extensions. All right, so we drew this up a long time ago. We got a new AB boundary on the 4 as we made that ABCD wave. That trade finally came through at 111.33, hit that 118 extension. So then if we go down to the 1, we say, hey, you know, we got an 80-20 scenario here, right? And let me zoom this in. It's on down. So we're kind of just hovering around here. Okay, and we're trying to get that drop. So we're moving sideways. We're trying to get back to this 38.2. Ryan, good evening, sir. How are you?
Good evening, bro. I'm doing well, man. How about yourself?
Doing pretty good, except for the fact, this new update, are you having issues with your scaling? Like your chart, zooming in and out, or is that just me?
Yeah, it gets weird sometimes.
It's hard for me to get it to the center of the screen. Yeah.
And I haven't been able to get it to the center of the screen.
Yeah, so, okay. And so I'm gonna send an email out. There's always some sort of glitch, seems like, when they do these updates. I figure at some point they'll perfect it. But what I've been having to do is just go to this, to lock it and zoom it in, and then, right, kind of squeeze it down, and then I'll take this off and then go back to my chart and bring it down. But
I gotcha. Okay.
yeah, it's been a pain. So here we are, everybody, right? So we've got the dollar. Couldn't find a scale lock. I've been doing it for a while with SmartTrader, so I knew where to go, but it's still not how it used to be. So they're gonna fix that. So here we are on the euro dollar, right? We know we've been bullish. Matter of fact, let me back out to the see how that's doing this. Let me back out to the to this daily chart and run that fit, right? So we know right up around 115, I was remarking the chart, is that D extension. So 114.93 is the monthly level, and then we got 115. So if it's gonna stay bullish, we got a ways to go. So we're definitely long on it, but we're looking at for some type of correction on this euro dollar, right? So we're looking for this move back down out of this 80-20 zone to this 382 or deeper. That's 200 pips. That's 277, right? So then it comes into our buy zone and we look to get long. I don't, now for my trade plan, I'm not looking to get long here to this extension, right? That's not the thing, right? I need it to move to the downside and correct to get me in position for an ideal low price. Now, people have different ideas in regards to what their low price is. That depends on their trading style. But if I'm using this fib right here on this 1 minute chart, I need this low price here, right? In my green zone. So then at that point, I can reevaluate things. And if I'm still bullish on this euro, at that point, I want to get long from there, but not until I get down here. So until then, it's in my 80-20 zone. I'm looking to get short to this 382. So that's the markup. So right now we're in a up, right? Because price is moving up. We're in a up retracement zone. Okay, so if you ever use that type of language, that's what we mean. Right now the euro's in an up retracement zone on the 1 hour chart. So we're looking for price to pull back or correct to an established low price to get long, right? And we know when it comes into our 80-20 zone, okay, 80-20 zone, we know that price likes to retrace at least back to 382, like we caught on those yens not too long ago. So maybe we can get price to start to decline and make some pips off that sell position. Any questions on the Euro USD?
No, sir.
Oh,
All right. So that's where we are. Taking a look at the pound dollar. So this one's starting to make some progress. All right. So look, you can tell, look, ABCD waves, we're up there. We're off of 382 on the weekly. Right? It just doesn't go on forever. At some point, we correct. Like here, that's a correction. Doesn't look like much from the weekly, but right, that's almost 300 pips, right, on that correction before it found support and continued. So the market moves in waves. We know that. Okay, we know that. So we come down to the daily. We can see this swing to the upside. That's going on off this low. Okay. So squeeze this down. I'll just run this fib from the low. Boom. Okay. Not quite to the D extension yet, but we're running into some daily resistance and we're getting a correction. That's how we're finding that setup. Okay. So look, here's the 4. We've gotten a 382 off daily support, and now we got a correction. Yes, we expect price to eventually move back long, but we're in the correction phase. So we come to the 1 where we drew this up. Now it's kind of taking its time. So I can pull my FIBs on here wherever they went. There we go. It's taking its time, but you can see how that price is coming down. Right. So the ultimate move is for us to get back to this 382 chart. Okay. This markup. Oops. It is literally, everybody, the same thing over and over and over again. So we want to see it, right? That's the trade idea, is for it to, at least when we're counter trend trading, for it to get back to this 382. Okay. And then we always set up that secondary target at the 61.8. And then of course we know if it goes all the way back down and takes back 100% of this fib, that 8 boundary is kind of like a TP3. But for right now, this one's just now coming back through that 80-20 zone, right? So out of that level, okay, so pound dollar is a big mover. So you're, what is that? Almost 50 pips, depending, a little less, depending on where you take the trade. 44, 45 pips, whatever, somewhere 45, 50 pips. So it's a good setup already. Okay, we just play larger swings. And there's a lot of people that'll take 50 pips and be happy. All right, but this is where we are. So we'll see. We'll see if that dollar finds a bottom and pulls back a bit. We know that it's made a pretty impulsive move. The DXY to the downside finally broke through that daily support. And now, right, we're seeing some declines here. Price corrected. Now, keep in mind, right? Keep in mind, we've got CPI data tomorrow, right? So be aware of that. We got CPI data at 2 a.m. for the pound. Okay. If it comes through and that CPI comes in above that 8.2 forecast and it beats expectations, then that pound is probably going to U-turn and shoot through the roof, right? If we come in at or below, and that depends on the details of the report, right? Where inflation is coming down, and you know what sectors are they seeing inflation come down the most? What sectors are still sticky? That all depends on the report. So when this prints tomorrow, we should see some type of activity. So with me being in this counter trend trade setup, I'm hoping inflation shows that it cooled quite a bit in the UK and this price just drops. Well, I don't know yet. Okay? We don't know yet. That's why risk management and using stop losses is so important. And I hope we all understand that in this group. Okay? That's what we preach, proper risk management at all times, in addition to having patience with the market. So that one's starting to creep its way down. So we'll see what happens tomorrow morning on the pound dollar. Any questions on that?
No.
So ultimately, right, we want to get to the point, and we say this all the time, that we can read some articles, whether it's in trading economics, investing.com, Reuters, Bloomberg, you name it, right? We want a Forex factor. We want to be able to read that fundamental data and have an idea on which direction our charts should be going. Everybody follow me on that? Drop me a 2 in the chat. All right. So what a lot of you are going to do, we're going to get to the end of the year, right? And me and Ryan talk about this all the time when we laugh. Just like how a few weeks ago we said, hey, man, if from January, right, until now, if we'd have just took long trades on the yen, we would be good, right? We talked about that. Why is that? Because we understand fundamentally that the Bank of Japan has made not one change in their monetary policy. They have not changed their stance in regards to their ultra loose monetary policy, not 1 inch, right? Since before and in the beginning of this year. Right? So think about that, because when you go back through the year and you do your chart reviews, you're gonna say, man, I'm looking at this weekly and this monthly chart, and man, price just went up for this particular currency. Price just went up all year, or price ultimately went down all year, and it just made waves, right, on its way up or down. It's pretty fascinating. So really, this year, focus on getting a better understanding of your fundamentals. Okay. All right. Ryan, anything to add to that? All right, must have stepped away. So I want to take a look at the pound dollar. I want to look at this CAD yen scenario on the from the daily perspective on down on this CAD. Okay. Because until we get a change in the monetary policy, I would really like to see this continue long. So this is what it looks like from the weekly. Okay, I'm interested to see if it eventually forms a base here and continues to push long. Is what I'm thinking. Okay. Now from the daily, okay, this is where we are. So this is, hold on 1 second. Get it to the middle of the screen. Okay. All right. So this is my daily fib coming off this low. Okay. So we got a stochastic that's in the buy zone, meaning that the momentum has slowed to the sell side, and we're kind of settling in right into this area. So I'm interested to see if we can continue to gain strength in the CAD from here on out against this yen. Now, this is a huge longer term move. Now, that's 900 pips, right, to the D extension, if this is going to be my lowest point within my AB boundary. Right? This is my C from this daily chart. I'm looking for it to move up from here. We've got 900 pips of buying potential. Okay, so a long-term play. Now, you may trade the smaller ABCD waves on the lower time frame, but this is the chart that I'm focused on, is this daily look right here to see if it can hold and continue to move along. So yet to be seen, but it's kind of things are starting to line up a little bit. Right? And I'm still just bearish on yen unless we have some type of major risk off scenario, which right now doesn't seem to be. All right. Any questions on that CAD in that long swing? Here it is on the 4. All right. We got a nice bullish candlestick there. Okay. So I'm interested to see if that can continue to gain momentum to the upside. All right. So that's where we are, right? That could be a big one. I'm gonna be patient with that. Just drip some trades in if it continues to go in my direction. So speaking on the yen, I want to take a look at the dollar yen because there's a long-term scenario on that too. Right. So if we come into the daily, it's starting to settle in as well on this dollar yen. So second, adjust everything and bring it into focus. All right. So here, all right, prices come right into past resistance becoming future support. So I'm interested to see if the dollar finds a bottom and starts to move to the upside. So we're kind of in the same scenario as that CAD yen where we've got the stochastic and the buy zone. I've got everything lining up like that. I'm gonna drip a super small position and see if we can get the momentum going. All right. So the way you can play these, right? That's a wider stop there. You could come up and you could put your stop right up under that C low as well, right? Because that's still from a daily chart, right? That's still quite a ways. See what I mean? Okay. So, and we always divide our risk by our stop loss. So however you want to play it, or you can move down to your lower time frame, and whether you're on the 4 hour or the 1 hour, okay? Here's this low that came in. So now it's just a matter of, can we start catching waves to the upside? If this is gonna reverse, okay, following along with our concept and our philosophy, it's gonna start making ABCD waves, right? So if this is gonna maintain this momentum to the upside, okay, then we know that it's gonna go A, B, C, and D. If that helps. So if you don't want to play it from the daily, right? You can come down to the lower time frame and catch a trend line break, which you had, and then, right, try to get that C to that D move. And you may only want to take it from C to D here, and just know that for the future, if it can maintain this upward momentum, I have potentially 900 pips that I can capture. Whether I swing it long as a position trade, or I'm in and out on the waves on the lower charts. Everybody follow me on that? Drop me a 1 in the chat. All right. So that's how we identify the opportunities. Okay. And I look to stay in that trade until the market either tells me I'm right or I'm wrong, either by hitting my take profit or hitting my stop loss. That's it. Okay. That's it. And if it hits your stop loss, cool. We look for the next opportunity. If it hits my take profit, cool. We look for the next opportunity, right? We never get too high. We never get too low, right? That's how we maintain our rationale. So, okay. So moving on, I want to take a look. Matter of fact, let's look at, before we move in, I want to look at so we saw in trading economics that the Nikkei was rallying. So we'll take a look at that. Ryan, it's all good. I saw that. I see that you said you stepped away for a minute. It's cool. I was asking if you had anything else to add, in regards to the fundamentals and such.
Yeah, nah, nope, all good here, man.
Okay. All right. So let's take a look at this. Let's look at the Nikkei. All right, and we can see, right, that it's been rallying. Look at that. All right. Now this feed, that's a lot. If I scroll back, it'll continue to come in. The feed is slow for some reason on these indices, but this is the main part right here. And we can see for the week that we've been moving bullish on the Nikkei. And here we are right here, right? So we're kind of in the 80-20 zone, but you can also kind of be in that range scenario where off this earnings news and this earnings data, right, we could just be moving back to the top of the range, which is cool too. We know how to play that because we know on the higher time frames, we've got a large range. Okay, right, and that's It's a lot of pips, but we know how to break that down into points, right? You got 10 pips per point, right? So it's a 10 game. All right. This is the Nikkei. This is the index, right? So when you look at your largest 225 largest publicly owned companies in Japan, right? So it's kind of like looking at, well, not kind of, but it's like we have the S&P and things like that here in the United States. So here is the Nikkei here, right? And we can see, right? Doesn't matter the instrument. Doesn't matter, right? So we've got a deep pullback. We've got an 8.6 retracement. We expect a 1.18 extension at some point, but you can see it's rallying, right? And when it rallies, everybody, it makes waves, ABCD waves, okay? So it's moving. So you probably come down to the lower time frames. Here's the, what is this, the 5, right? And you can see what it's doing. So no matter what it is, you can see where you got a trend line break and it's just running, right? It's just running long, right? So if I was gonna buy that, I would prefer to have a lower price. But we'll see how that plays out. So that's the Nikkei, right? Now, or the Nikkei, right? Some people say. So we take a look at the S&P, right? We can see, right, where we're just rallying, right? Go, look at that. It's moving straight up, okay? Moving straight up. It's been a big bully. We're just running. So we're about to run right up here into this 80-20 zone. At some point, we'll see some relief. Maybe it's here in this zone, but that's where we are right now. S&P is moving pretty strong. So we got a shallow retracement less than a 382, and we're moving up. Okay, we're moving up. I don't know. Did I mark the 4 on this? Yeah. So we see we're moving straight up on the S&P. Okay, got a 236. This tells you when you get this shallow retracement, the bulls are in control. The market's rallying, right? We didn't get a 382 or deeper. It's just rallying. Boom, hit the D extension straight through. It's looking like we're running for another 80-20 type scenario there, right? So when you start to see it run consecutively like that, you should always use additional confirmation, especially when you see that the bulls have control of this market. We'll see what happens when it pops up in this zone right here. It's just gonna start making some lower lows and lower highs and correct itself. But it's not ready yet. It's not ready yet. So bulls are out in the stock market. Any questions on the S&P?
No.
All right. Look at the Dow and the US 30, right? Rallying, right? So we understand the key with these, right? And Ryan, I kind of, since the pandemic, I kind of been off of them, but still get back involved. But the more from an investment standpoint, not such trading, but you see all of them are rallying, everybody. So if you understand fundamentals, right? You got earnings coming out. These markets are rallying across the board. You could pick those off if you understand that, right? So if you guys are already monsters with the text, right? So if you just understand the fundamentals, you know the market is rallying. It's a risk-on scenario. These markets are gonna go straight up across the board. There's really no guessing, right, or anything here, right? They're moving, right? That just moved into an extension. Okay, so you're looking at the same thing, no matter what, right? And that's the cool thing behind what we teach. You don't really have to change a thing, right? In regards to how you set your chart up technically, right? So that's an extension that just got hit. So that's ran its course. 50% pullback, beautiful structure there, daily and weekly zone. Boom, gone. Right? So you can run your sub fibs off of that. This is a 4-hour. And you can see where it's just moving along. So we'll wait for we need new AB boundary eventually to form. Did we get it yet? Yep, we got it. Look at it. It's just rallying right now. So that's your US 30. Any questions, right? The bulls are out. NAS, I'll I'll show you. Let me see. They got it on here, I believe. NASDAQ is, which one did I pull? NAS 100. So if you go in, it's been acting funny. So if you go in and you just scroll down, a lot of them, I can tell they're starting to make the adjustments because everybody is demanding it. It didn't used to be like this. So if you go in and you just scroll down, you start to see them, right? Because the chief's so old school and traditional, right? It seems like, and that's cool. That's a great thing. Taught me everything I know. But these indices, right? Before that, you can look at the just slipped my mind what we call them. But anyway, you can see like here's the nat gas, here's the Nikkei, you got UK oil, here's your NAS 100. So if you go in and you hit the NASDAQ, everything is gonna come up because you could trade. So they have so many different. I keep forgetting what I'm saying, but so many different ones. I'm just gonna say it like that. So you can look at the QQQ, all that, but now they have it programmed in here as the NAS 100. The feed, they still, this is either my computer or they still got to work on it because the feed doesn't go all the way back. The history doesn't. But this is the most recent and the most relevant history. And you can see that this NAS is just running, right? There was a possible 80-20 on the 4. It just kept, this is a freight train. Freight train right now. But there you go. You can see, look at that. Right? So that's chasing that daily resistance level. And we'll see if it taps that extension or not. That's moving. That's been pretty explosive. So that's moving straight up, right? Hardly any correction at all. So we're looking at some pretty good rallies, right? You're welcome. So that helps us, guys, understanding with currencies, right? So when we see this stuff going on across the board, we're like, oh, this must be risk on. Right? This must be risk on in the markets, right? So even if you don't trade them, just like how I can look at, I'm not a bond trader, but I like to look at that 10 year and that 2 year when it comes to bond yields because the dollar typically follows, except for last week. That was kind of weird. Let you know something's coming with the dollar when the dollar didn't chase the bond yields higher. But I don't trade the bonds, just like I don't trade the DXY. You guys get what I'm saying? But all of those are key data points for me to take a look at when I'm looking at swing trades and kind of make the determination, hey, is the market risk on? Risk off? Okay, what currencies benefit, doing certain market sentiments, right? Overall, you kind of put the pieces to the puzzle together. All right, so that's the NAS 100. And you can see, look, they're all running the same direction. We could look at, let's look at gold. Since we're looking at indices. And we can see, JC, what's up?
Hey, Benny, I got a question about FIBs in general. So sometimes what I normally do is run my primary FIBs on the weekly, daily, and then I do like that whatever swing is, if it's going up or down with my sub FIBs on the lower time frames. But I've been noticing like sometimes that's not that FIB don't line up with y'all's FIBs. And I noticed, so like the NAS 100, I ran my weekly FIBs from that same spot, but not my 4-hour FIBs.
Okay. So what
So
we got to do is,
I need to go back to that same spot with every time frame?
yes, that's what we primarily like to do and where we like to start.
Okay.
Yep. So what I'll do is, like, for example, here, so we drew this up a long time ago and that held, right? Past resistance became future support. Gold's been pumping out of that zone ever since. Okay. So what you could do is, like, say I wanted to run my FIBs from here, I'm just going to trace that spot down. Right. And I usually do it like this. If I wanted to run a FIB from there, to catch that move coming out of support, see that? Right. And then I could come in if I wanted to catch, hey, I want this leg right here. Right. Then I'm going to start moving down and running my FIBs. See, like that. Or so you can see here, see how it's running up out of the zone right here on the 4. See that? Okay. So, however, wherever you set your mark, so even if you came down here and you ran them off this low, yes, you're going to scroll all the way back. So what you'll do is you'll come, if you're just looking at the overall, trying to find that overall move and be the most accurate, you're going to come to this low. Okay. Like so. And you're going to link it down. That's how we track it. Okay. And then what you can do is you could come all the way back and find that circle. See here? And that's where you can run your fibs, start running your fibs and catch them all the way up. So there's always like your overall move. And then sometimes like when you saw it from the higher time frame and it forms support right here, you may say, you know what? I just want to focus on this impulse leg right here. This is going long out of this zone. So when I go down to my 1 hour, my 15 minute, my 5 or whatever you trade on, I want to focus on this right now because I can run a fib, right? Say I ran a fib all the way from the low and it said, well, you got a 61.8 pullback and your 1.618D extension is way up here. Okay. Well, okay. I know that's my overall target now. So from the higher time frame, so say this is like the weekly, and this is a hypothetical, right? So my weekly 1.618D extension, like that. So now it's like, okay, I need to get there. Well, this is my last impulse leg off support. So what I want to do, because I don't want to play the larger swing from the weekly. You don't have to. You can, but you don't have to. You could just say, you know what? This is where my last U-turn was in my trend line break, and now I'm looking to go long. So I want to start it coming out of that support and moving up. See, like this. Because I expect until the market tells me otherwise for this to move bullish off this low. So what I want to do is I just want to track my fibs moving here, and then ultimately I've got a target, right? I've got my smaller targets on my fibs, but then my ultimate target is for price to move way up here. Okay, that makes sense? Hope so. If not, I'll explain it. Yes, no, maybe.
Yes,
Seeing
my
yeses in
bad.
the
Yeah,
chat.
it makes sense.
Okay, all right. So there we go. So you can see, look, you see it's making its waves, right? So this is your larger wave right here, right? See these impulse legs moving, right? Long. And it's so it becomes so clear, right? With the way it's like, look, see that? All right. Now I'm bouncing. Now, I know I can run my fibs to get a large overall move, but here's my latest U-turn. I want to take it from there. Okay. So, and you ride it into the fibs. So you can do that. But for your general question, yep, you want to start it from the low and you're going to work it. So what'll happen is you may get a big, huge fib to pop up on your weekly, but as you go down through the lower charts, you're going to have like fibs get taken out, price is going to move sideways, and you just want to trace all the way up from that point until you find the most active fib. And that way you'll have your fibs a little bit more accurate. Yep. So this is where we are on gold. All right, so we're moving bullish. Hey, it's an ABCD wave. Boom. Okay. So now we're looking at another pullback, a correction. So think about it. If the dollar gains some strength, finds a base, and at least corrects, right? It might not be long-term bullish on the dollar, but it's been moving down quite a bit. So if the US dollar finds some strength, right, you can see this move down and correct within the AB boundary. And then maybe a U-turns and moves back up, depending on what happens with the dollar and things fundamentally in the market. So that's where we are on that. Any questions on gold? So this is where we are on the 1 hour wave right now.
No, sir.
Ryan, thanks, Ryan. If I'm buying, right, I want that price to come down in my strike zone. If my bias is bullish, I want a nice low price. Okay. I want the 61.8% discount or the 78% discount or the 86% discount at the store before I buy that shirt. Right? And that's all we're doing. That's it before we get back long. All right. That should look also on gold on that. So we have some good confluence going. Awesome. Thank you. All right. So let's take a look at oil. Look at crude. All right. And we are starting to move up. So I just been playing this, just, hey, it's so choppy, right? Just level to level. Look, we got a break. Joyce is still alive. So look, we got a break. We got a recess. And it's on the daily. And so we're slowly moving down, right, out of that sell zone. Okay. So we're at 75.60. Let's see if it holds and gives us a low from the daily. All right. Let's see if it wants to keep moving to the upside. I can get caught up on my fundamentals on gold. But you can see this is, whew, right? Let's see if we can get it to continue moving bullish. What's this next high right here? Off the 4. This is what's this up here? 77.32. See if it can complete the U-turn and take out that high. You can't run it off this wick. You can run a fib off this wick. Right here. Boom. Okay. Let's see. Ideally, we'd like for it to come down and get long, but no. I don't know. Got to get caught up on a goal, but you get this level right here, it likes. All right, 63.75 is pushed up off of that level multiple times and it's running now. Here too. 67.05. Be interesting to see if that can continue to climb. I have to check the supplies. I haven't done that. All right, so that's oil. I know we're a bit over time and keep rocking and rolling. I wanted to check this this dollar Swissy. Because we are moving down on this dollar Swiss, but we got a new AB boundary, right? You can see, look, 382, that was a long time ago, and it turned over off that 382 and we hit that extension. So I can take this out now. And I'm gonna go down to the 1 because I'm looking to see if this could make, I would love to see it test this support and then make a U-turn and move bullish for a correction. If I can never get my chart to show. There. So let me do this. My goodness, I'll get this fixed fast. This off. Squeeze this down. There. Okay. So this is ideally what I want to see happen. I would love to see that dollar come down and retest what is daily support at 84.99, right in that 80-20 zone. And if it holds, we can get a possible U-turn for correction to the upside, right? So that's my dollar and a temporary strength after declining the way it did at Creighton, right? Maybe some relief and dollar back to the upside. I may not get it to go to that daily support. It may U-turn before that, but that's the idea anyway, is for it to move into that 80-20 zone. There we go. Move into that 80-20 zone and then look to make the U-turn. Okay. And if you want to stay short on the dollar, then you want that high price anyway. You want it to move up 437 pips to that 61.8 and then look to get short. Any questions on that dollar Swissy? I believe we posted that at the Discord.
Nope, no questions.
So let's look at this Aussie CAD. Brian, I got short on this one.
Yeah, I added to my position on it.
Yeah, I'm short. So far it's looking pretty good to the downside. I know, guys, we've been watching this one for a while. This has been a long play, but that's looking good to the downside. So I'm gonna stay short on that, on this move. So it's turned over pretty good. So hopefully you can continue to see some cash strength. My Aussie, fundamentally, that GDP number out of China, you know, so I'm not sold being that that's their largest partner. That one hit pretty big. I know China's planning on, you know, stimulus and all of that. I don't know how large that stimulus package is going to be to keep that economy propped up, get it going, but I'm bearish. I'm bearish for the most part on the Aussies, except for I still like the Aussie yen, but I'm bearish on this one. So we'll see if we can continue the momentum to the downside on the Aussie CAD. So far, so good on that. So continue to keep an eye on that for everybody. I want to check out. I thought I had put up. Did I not do it? Hold on. I changed the, I didn't rename it. Sorry, everybody. So this is actually the Bank of America that I need to rename. I had typed it. So this is Bank. So we can see from the weekly, right? Just off that earnings news, right? Look at that pump to the upside. Okay. So that's your weekly look. So it's just like everything else, everybody. It's just like everything else, right? And how you look in your approach to the market. Okay. So this is the weekly look. Okay. All right. So if we come down to the daily, right? You can see how this is climbed. All right. This is starting to climb. It was found that bottom and is long. So you can see we've surpassed the D extension on the daily. And if we zoom in, you can see that we've tapped into a D extension on the 4, right? So that's a nice rise. Yeah, we got that H6 pullback, H6 1.18 extension. We're beyond that now, and we're into daily support. So I actually look for this to continue to rally, right? Pullbacks and continuations on this Bank of America, right? On the heels of that earnings. Look at that. The perfect ABCD wave. All right, look. A, B, 61.8 pullback against daily support to the D extension. Can't get no better than that. So we'll continue to look for longs, right, on some of these bank stocks. But that rallied to that extension in a hurry today off that earnings news. But that's how it all works. That's how it all works. So it is around 10:15. I know I done ran way over this. I think that's the time. Ryan, anything to add before we close out? I hope everybody learned a little bit today.
A question for you. Do they have the funds on here too? Like ARC? And the funds like ARC and I know it has SPY, but some of those funds.
I don't know. What's the okay, I have to just type into this real quick. Do we know what the symbol is for ARC? Is it just ARC?
ARK. ARK.
Yep, it's right there.
That's one of them. Okay, yep.
And that's
Okay.
the ARC innovation. This is the fintech one right here.
Yeah.
That
And
yeah,
then
you talk
the last letter
Cat.
changes on those, so you can see the rest of them.
Yeah, and this is Kathy Wood, right?
Yeah.
Okay. Yeah. So yeah, they're
That's
getting it
something else
all.
we can look at too. When we talk about
Yeah.
from an investment standpoint, we can look at some of those funds and look at where they are and what they're doing. So watch the waves on those too.
For sure. I'm with it. It's all about the education. Let's do it. Any other questions, anybody? No? All right. Hey. You're welcome, Michelle. I'll tell you. Oh, EA. All right. I'll take a look at that for you real quick before we log off on this Euro Aussie. Let me see. We are moving right along. And we are getting there. But we are getting there, right? So we came back, we pulled back to an 8.6. So we're coming in on that 257 pip target. So what's that? 166. So we need to break this daily level on this EA. But it's making this move. Yeah. It's a monster correction within the zone, but it just triple bottom pretty much. Didn't take that A out though, and it's still moving. Right. So we're closing in on it. Is that what you have? You have the same thing? Yep. All right. Bounce right off the level. Yeah, right. Isn't that amazing?
It's crazy, man.
I know. Patience pays. We were just talking about it today, me and Ryan. Like, man, like when we're pretty good at adding to trades, but sometimes we just miss it. You know what I mean? Like we miss adding to positions. Whereas a lot of times people, we work within that Fibonacci framework, knowing that hey, as long as it doesn't take out the A, it has no choice but to go your way. And some folks be like, well, you don't want to add to a trade that's losing. And we look at it like, well, it's still within my AP boundaries. So those big corrections just give us an opportunity to add to the position, kind of like that pound Aussie trade as well that made that monster correction a while ago off monthly support, and then it just picked right back up, So as long as the power of risk management, trading small, and small is relative to your account, and trading small and adding to positions as it goes in your direction, it's very, very powerful. Yeah. 163.22. Whew. Yeah, so you're doing good. That's wow. That's 163.22. Dang. So that's nice. That's a nice game. So well, that's it. We're gonna wrap it up, everybody. The show doesn't stop. We'll be right back tomorrow morning with my awesome partner, Mr. Ryan Carthage, for the pre-New York session at 6:30. Thanks for coming here, being with us every night, asking great questions and showing up for yourself. Have a great night, everybody.